Aloha, everyone. Welcome to Java with Lava. This is the market take for the morning of Thursday, August 3rd, 2023. Thank you, everyone, for joining me. And I just wanted to bring this up. These are the earnings that we are expecting today because there's Amazon, Apple, and Coinbase. And of course, those are huge ones. They do have market moving potential. Also, going to be looking at Airbnb because I think, in my opinion, this might be the last really good earnings for some time because of the travel boom. We'll see what happens with that. But you can see some of the larger earnings that we will be expecting today. Now, yesterday, the markets reacted to the Fitch downgrade of the US debt. So it looks like we are continuing for now. Right now, they're in the red. We've got the VIX up, that's fear trade. The US 10-year is up. And we've also got in the futures looking kind of red, all of them, including the commodities, gold, silver, and crude, which kind of tells me this is a knee jerk reaction. So we've got Bitcoin is still above 29,000 for now, and under that 30,000 level that I want to see it above before I go in a little bit more. But at any rate, I think this could have a bit more corrective pullback before that happens. We'll see. Not financial advice. So the dollar index still staying stronger than I expected actually on the back of that downgrade for now, but we've got a currency war going on. So the reports that we are expecting for today, we are looking for the Federal Reserve's next move for whether they're going to hike or not. Most people are thinking they are not going to hike again, but they are looking at employment data, which is mostly what we're getting today, jobless claims, and then also the services and factory orders. I put in Fridays because these are all pre-market, non-farm payrolls and unemployment rate. So that if you are also an options trader, you can take those into account when you're setting up your trades prior to it, or at least watch these trades if you're paper trading. So going back to the markets, what they did yesterday, this is just my opinion, but watching this, it did go down, but this is kind of a stair-stepping move. In my opinion, this is not the big one. This is not the pattern of a run for the exits crash type that some people are saying this is the beginning of. Could it be? Possibly. Maybe we are having that slowdown turn. But normally when you have a crash pattern, it's everybody is going for the exits at the same time, and the exits are already barred. Nobody's buying. You don't have these comeback ups here. And we're still above key levels. We're way overblown. Nothing goes straight up, nothing goes straight down. So I think this is just a corrective pullback, may continue today. We'll see what happens over the weekend, but it could recover next week a bit. We will be looking more towards a bit more late August, September. We'll see what happens until then. I'll keep you up to date. So another one with the central banks, the Bank of England, they raised their rates 25 points. They're trying to keep in step with the US dollar because this is a currency war. And if anyone does anything too differently, it can have a larger effect between their relative strength, even though they are all deflating rapidly. So, hence, on the other side, we're watching prices inflate because the currencies are just not as strong to purchase anything. So, I wanted to bring up the effect of this is the Fed rate hikes. It says they're crunching balance carrying cardholders, so mostly like credit cards, Visa, MasterCard, they're raising their rates. So they're paying close to 25% almost on balances. And this is bringing up the national credit card balance around $1 trillion. And once it gets past that one point where people can't pay, they will stop paying because it's unsecured debt. So there's nothing they can lose once they charge a trip or a flight, and they already go on that trip or flight, and they don't pay that credit card debt. It's not as big of a deal as opposed to not paying a house and having it foreclosed upon or something. So we've got major global firms warning of a slow China sales because China now, if they have a downturn in their economy, it will affect the rest globally because we all, trading together, basically it's the relative strength again. There is not any one that is independent of the other. We still have large trade agreements, and this will be huge. So on this, I wanted to bring up BlackRock because they're closing on this. This is just talking about one acquisition, the Creos acquisition. So they're adding to their private debt team, and this is over in Europe. They are growing more, and BlackRock is not your typical financial sector company. They are a pseudo arm between the Fed and also with a little bit of military backing. And why do I say this? There's a lot of reasons. I just want to keep your eyes on this because they are affecting and manipulating the market and getting close to the realms. They don't have the same effect that the Federal Reserve does, but they're doing pretty well. So we got to keep an eye on them. So I've got a couple of updates I wanted to bring for you. Of course, WorldCoin, my favorite, and I'm being sarcastic. For those of you that don't know me, I don't like WorldCoin. So they're going to let companies and governments now use their ID system. This is their words. They're on a mission to building the biggest financial and identity community that they can. Okay, there's huge problems with that. That's a major red flag. And then they go on to say, I don't think we are going to be the ones generating universal basic income. But if we can do the infrastructure that allows for governments or other entities to do so, we would be very happy. So they're gathering everybody's data and they want to link this in with the financial data of their accounts. And then they're going to let governments and other entities or businesses, anyone that they feel free to, because now they own that data for the price, which is about, they were scanning people for roughly $50, which to me is insane. But yeah, I never want to see any of these ARBs any closer than this picture. Anyway, this is one more case right here. Wells Fargo. Looks like it should be an old story, but this is just from yesterday. They're doing it again. Wells Fargo accused of new fake account scam in a lawsuit alleging racketeering and identity fraud. So, another bank that is scamming. I mean, there's no shock here. And what is going to happen with them? Probably nothing. They probably have to pay a fine and they can continue. But they've got, these are the banks right here doing identity fraud. So, I try to bring this up to people of why this is such a bad idea to tie the two together, especially with biometric information that you cannot change. It's the same with the genetic test kits that I try to urge people don't use those if you haven't already. You can't change your DNA and you can't change your retina scans. It would be very difficult. So there's dangers with these, and it could be a long recovery. I don't mind these ARPs, but yeah, won't be going in with the identity fraud thing. It's the most difficult as it is. So I just want to keep everybody on the right side of this. What do you think? What do you think of tying together financial institutions, the government, and biometric identity? It just, I can't see any reason that would be a good idea. And I want to keep it all from any of them. It's just we want to be independent. And then again, if you go to silver, gold, or even if you use ammo, food, that we can trade with each other physically, they don't want us doing that because then they can't control it. So, anyway, with that, I'm going to wish you all a great trading day, just a wonderful day in general. And thanks for not scanning your eyeballs. So, until I see you again, stay free, my friends.